We're going to go ahead and get started with our SCORE intro in the interest of staying on time and making sure we get through everything today. Welcome to Legal Business Entities. We have Bill Hulsey with SCORE Boston. He's going to go through all the different types, and we're going to try and get through as many questions at the end, as I mentioned, as we can. We would like to encourage you to consider following us on social media. We are posting different information than what we do at our workshops, plus information on background and some of our different mentors, etc. So you might find that information interesting. So I want to talk about what the things that SCORE does. One of them is training, and you guys are all here for that today. We have a wide variety of webinars and some in-person workshops, and I definitely and strongly encourage you to check out the website and to watch for our newsletter that usually comes out on Mondays with all the events in the district. We also have training and templates and downloads that you can find on the website. Totally check those out. Lots of great information that you can use. The most important thing that SCORE does is the mentoring. Our mentoring is free and confidential. Our mentors come to us from a variety of backgrounds, and they have a lot of different information, business-related information to share with you. Those that we help are at all different stages. We're working with those that are trying to decide if small business ownership is for them. We're working with those that are in that planning phase, and we are working with those that are already in business. We can mentor on a wide variety of topics, whether it's hiring, financial management, marketing, branding, work-life balance, any business topic you can imagine. We probably have a mentor that can help you out. A beginning session is going to be finding out what your goals and challenges are and helping you come up with a plan to get there or to overcome. And we do work as a team. So you'll be assigned a primary mentor, and then that mentor will bring in others as needed to round out your education. How do you get a mentor? Super, super easy. SCORE.org. There's a little box. You can put your zip code in there, and it will match you to the chapter nearest you. You can put in all the information needed to describe how we can help you so that we can match you to the right mentor to assist you. Okay, we do expect a very nice group of people with us today. So I want to encourage you to use the Q&A tab. It's on your Zoom bar. That will be for questions you want to ask the presenter. And we will try our best to get to as many of those questions as possible. So yeah, everything else can go into chat. And I'm going to pull this down so that Bill can get his stuff, his slides up, and we can get started. While he's doing that, I'm going to go ahead and talk about the recording. Today we are recording. You can go to the score.org/Boston website. Underneath local workshops, there is a previously recorded section, and you will find today's presentation there.
All set?
Okay. Yep, all set.
Thanks, Teresa. So good morning, everybody. It's a beautiful early fall, I guess we can call it, day. So I want to thank you for taking some time to be here with us today. Hopefully, my goal is to make sure that you get a sense of some of the basics of legal entities and the various issues related to those. This is one of a two-part series, and my colleague Dave Berman, I think Teresa, right, is going to be doing a second session on some specific legal issues around contracts and legal entities. So stay tuned for that when that comes out, and join into that one too. And just to follow up on what Teresa said, you know, feel free to follow up with us. Sometimes people feel they can't, they're not ready to ask a question, or they're not ready to meet with a mentor. And we're just the opposite. We have a very wide open door for you, no matter where you are in your process. So come to us, please. Let us help you in your thinking and get you started down this path that you want to go on. So today we're going to be talking about these entities. You can see the disclaimer there. We can't be your lawyers, but we do try to give good advice and we try to stay current in things. So let's see. There we go. So just starting with a little overview, we're talking about the different ways in which you can set up a business. And just we're going to go through these in more detail, but the first one is not to create any business entity at all and just to operate as what's called a sole proprietorship. That's where you just start your business. You might get a new tax ID or something. The second category is where we end up sending a lot of our people, and that's the limited liability company. It's a very simple process. There are two fundamental iterations of that we'll talk about in a little detail. Then there are corporations, and I'm going to note now, and then I will reiterate this later, that the S Corp is not a corporation, it's a tax status. So sometimes we'll get a request for people who say, I want to start an S Corp. And so we have to explain that to them. But there are, there are S Corps, there are professional corps, nonprofits, and the B Corp, which is a benefit corp. And then there are partnerships, which is kind of a variation on the limited liability company. Some other things we're going to talk about are where to form the entity. Massachusetts, for most of you, or Rhode Island is your state of residence. So that's a good place to think about. A lot of people, for corporations, particularly if they're anticipating venture money or angel money, are suggested to go to Delaware. There are some people that think states like Wyoming are good because the members of the entity are not known. They're kept confidential. The foreign qualification has to do with if you are an out-of-state business, how you can do business in Massachusetts or Rhode Island, how to reserve a name and the registered agents and so on. So, and then we're going to talk about a series of, excuse me for not doing better with that. We'll talk about licenses, and then I think Dave is going to talk about the second part of this, which is leases and some contractual documents that you might want to know. So let's see here. Oh, you know what? I think I needed a different slide deck, but that's okay. I can do them from this. Teresa, how do I back up? I need to go to the top of the deck again.
You should be able to, there should be little arrows at towards the bottom probably that help you go frontwards and backwards, or you should be able to use your keyboard.
Oh, okay.
Arrows.
All right, there we go.
Yeah.
Thank you. All right, so I thought this was a different deck. My apologies. So now we'll go into the details here. So again, the sole proprietorship is where you own the business, you are the business, you can get a different tax identification number, but there's no corporate entity, business entity on top of you. So it's cheaper to do that. The upside is, especially if you have a smaller business, it's cheaper to do. You don't have to register with the state. All of your income is going to be taxed to you directly. Obviously, there's no entity to be taxed above that. The main problem, and the reason we often steer people away from the sole proprietorship, is because you, as the sole proprietor, you're individually liable for the actions of the business. So, and Dave will talk about this more, but if you think generally, there's kind of three elements to managing your risk. And one of them is having an entity to interpose between you and your customers or people who may seek to sue you. The other is having insurance in place, which will be part of the second discussion. And then the third is your contracts, where you allocate liability between the partners. So with the sole proprietorship, you can still have your insurance in place. You can still have contracts. that limit your liability with your customers and so on, but you're on the hook for your personal assets unless you've laid those off in your contracts with your clients. So the second one, and again, the one that is most popular for us, we find, given the size of businesses we see and the needs of the businesses, are these limited liability companies. But let me stop right here and say that your decision about which of these entities to form is a conclusion of your business plan. It's not the premise. A lot of people come to us and unfortunately say, oh, I set up a C corporation in Delaware already. And so we'll ask them, well, why did you do that? Did you know you're going to have to also establish yourself for an additional $500 as a business in Massachusetts or Rhode Island? So we ask people to hold off unless they're already in business and if they've already got their entity in place. But if you're starting a business or thinking about it, let's have the conversation of which of these is the right business for you in the context of your business plan. And some of the elements of that are, where's your money going to come from? What are you in a particularly risky business in terms of money? Are you expecting outside investors who may want to be shareholders? Are you going to be a sole entity, a single member company? Are you going to have other partners in the organization? So these are some of the things that we want to ask you. And then based on that, then we'll say, well, maybe an S Corp is the right model. So some of the attributes of a limited liability company would be that you are obviously not going to be able to issue shares. And we'll talk about the LLC and then the PLLC next. You can have members, multiple members, and you'll have what's called an operating agreement there that I think Dave will talk about in a little more detail. But there's no tax to the company, so the revenues of the company flow down to you and into your 990. And if you're a single member LLC, you're going to complete Schedule C. Some of you may already be doing this, which is income and expenses related to a business. If you're a multi-member LLC, then you're going to be treated like a partnership, and your taxes will be recorded on a Schedule K1. So it's a little more complicated. You probably will. The good tax packages like TurboTax and the like all can take you through either one of these, or you obviously can get a good accountant that can take you through that. But the main limitations are you're not going to be issuing shares. You will have that liability presumption that the company only is liable for the any liability related to the business as long as you run the business distinct and separate from your personal affairs. So we usually encourage people to get that employee identification number, set up a separate company bank account, keep your books separate, and so on. But this is a nice, easy way, both in Massachusetts and I believe Rhode Island. There's a great, I'll put the link in the chat in a minute, but if you just Google NOLO Massachusetts LLC, you'll get a really clear step-by-step about how to set up an LLC in Massachusetts anyway. And I think they have a similar set of guidance. You don't need to hire NOLO, but it's just they've done a good job of putting that together. So a PLLC is a professional limited liability company. And if you happen to be in these aren't available. I just checked this recently. I don't think they allow these in Rhode Island. But in Massachusetts, if you're in a regulated industry like medicine, the law, certain other health professions, dentistry, and so on, you can create a professional limited liability company. And the point of that is it has the same, same tax treatment as the LLC, but the difference is that the members of the LLC, the doctors, are insulated from liability for the actions of the other members. So if you have a multi-doctor practice, let's say, or a multi-architect practice, and one of the architects gets in trouble, the rest of the members of the PLLC aren't liable there. But it's the same tax protection in terms of treatment. That's it's a pass-through entity, so only taxed to the individual recipients. Obviously, if there are more than one, then you will be treated as a partnership. So moving to a corporation.
Can I interrupt real quick?
Yeah,
We do have
yeah,
a
sure.
question.
Yeah, sure.
Yeah, I have an LLC registered under a name, and I have paid the Secretary of State for my LLC. Do I still need a business certificate?
You need a business certificate in Boston, certainly. And if you are operating under a name other than your corporate name, let's say it's Hulsey LLC or Bill LLC, but I call my business by some, marketing name, then you will need that business certificate, or what's known as a DBA, where you declare basically that you're operating under an alias. So you would go to the town that you're in. If you're in Boston, I think any business that's doing business in Boston, which doesn't mean necessarily that you live there if your business is all online, but if you're offering goods and services out of a location in Boston, then you do have to go to the Boston City Clerk and do that, file that business certificate. If you live in Worcester and you're doing business under a name other than your corporate name, you go to the town clerk and you declare to the clerk that you're operating under this alias. That way, anybody that sees that alias that they're doing business with can know who the entity is that stands behind that. Does that answer your question?
They say I have name for LLC and live in Cambridge.
Well, okay. So if you're operating under the name of your LLC, you don't have anything to worry about. You can check with the clerk, the town clerk's office, to see if you're required to do it, even if you're not operating under another name. But as far as I don't know every city or town in Massachusetts, but as far as I know, Boston is the only city that requires you to register to do business. And again, the caveat there is if you're doing business, not just located there. So if your business is all online, you don't have to file in Boston either. But just to double check, go to your town clerk, and there'll be a spot on the town clerk's page that tells you what the requirements are. And if you have any questions, just reach out to me through Teresa, and we'll go through it together. Shall I move on?
Yeah.
Okay.
Yes, we're all, yeah.
All right. So the next level of complexity here is a corporation, and everybody knows of a million corporations. The benefits to the corporation is, again, you have that insulation from personal liability. Depending on how you're capitalizing yourself, if you're going to have venture people coming in and wanting shares of the company, if you're going to have angels that want a share of the company, angel investors or something like that, or you just want to issue shares, and we're not talking about publicly traded shares, but shares to individuals who may want to have a securitized equity position based on money that they've given you, or even sometimes startups will trade shares in the corporation in exchange for sweat equity, where the newer people coming in can't be paid yet, but they take an equity position in the company. So that's where a corporation would come in handy. The most common is the C Corp, as you know. And typically, the issue there is, we'll talk about this a little more, but, where am I going to set myself up? Am I going to set myself up in Massachusetts or Delaware or some other state? And I think there's a slide to discuss that in a minute. So I'll just table that for now. But the C Corp is good, again, if you anticipate capital or working with the angels or venture capitalists who are going to want to take a piece of that company. Again, the taxation is tax to the entity, and then when you take your money out, either in terms of salary or in terms of distributions based on your shares, you're going to be taxed again on that. So usually for smaller companies, that additional tax burden doesn't really make a lot of sense and really cuts into your margins and your profits. So in most cases, we look, but we counsel against that. The S Corp, I'm going to actually cover the other ones and then come back to the S Corp, because as I said, that's not an entity. So a professional corporation is the corporate version of the professional limited liability company. And this would be where a group of licensed professionals, doctors, healthcare professionals, architects, and so on, get together and form a company. And it creates the same sort of limitations of liability among the partners as the PLLC does. Pardon me, it's the same tax structure. And so it's basically a variation, pardon me, on the corporation, limited to people who are working in registered professions by the state. So I'm going to skip I'm going to do B Corp and then nonprofit. So the B Corp is a benefit corporation, and these came into vogue a few years back. Generally speaking, the board and the officers of a corporation have a fiduciary duty to the shareholders to maximize what's called shareholder value. So they have to do everything with a view to the bottom line and a view to how this is going to impact the share value of the stock value of the individual shareholders. The B Corp came in as a way to say, look, we don't necessarily, we understand that some companies have other values other than maximizing the profits of the shareholders. They want to pay more in benefits and salary to their workers. They may want to be involved in more pro bono or charitable activities. They may want to have varying rates to charge for their goods or services. So they created a category called the benefit corporation, where you go through a certification process and you're subject to audit here, but you don't have to, you're kind of immune from shareholder lawsuits saying that you failed to maximize shareholder value. So that's what those are there for. We see every so often, we'll see somebody that, has made the decision and it looks like the right one to be a corporation, but they do want to be a little more kinder and gentler, as they used to say, to their workers or to their customers. So in that situation, the B Corp is a way to go. There are some transactional costs related to getting yourself certified as a B Corp, but otherwise it looks just like a regular corporation. It's taxed the same. Your filings with the state are the same, and so on. So now I'm going to flip back up to a kind of a different, and I should say that all of these for-profit entities that we've talked about so far, most of if you're not publicly traded particularly, which it would be rare for us to see something like that, most of your finances are not made available to the general public. The reason I'm saying that is because a nonprofit is a little different. As you know, a nonprofit is also considered tax exempt. And the reason you're tax exempt is because you're not operating for profit, for the profit of the individual people who work for the company. So, universities, hospitals, a lot of charitable organizations. The difference between this and the other organizations is that your nonprofit status is established by the state. So you would file an application just like you would at the Secretary of State, just like you would for any of these entities, only you would seek recognition at the state as a nonprofit. And what you would say is that we're going to be involved in these recognized charitable activities that, if the state agrees, will exempt us from state taxation and even sales tax in certain instances, but we agree to play by a different set of rules. One of those, as I was just discussing, was we're going to make our books open to you. So those of you, if you went to a college or university, pretty much anywhere in the country, most of them are nonprofit, and you can go to a place called guidestar.org, and you can look up what's called their 990 forms, which is their accounting for their finances for the year. And you can see the top 5 paid individuals. You can see where their money comes from. You can see where their money goes. You can see how much money they have. So it's kind of fun sometimes to go back to your alma mater and take a look and see what those forms show. Sometimes it's a little surprising. But after you've gotten your nonprofit recognition from the state, then you apply to the Internal Revenue Service for recognition as a tax-exempt organization. And there's a series of ways to do that depending on the size of your organization, from a very simple application if you're a very small organization to a much more detailed one if you're over $500,000 a year in revenues. But basically, their recognition as a tax-exempt organization, typically most of them are under what's called 501c3. You may have heard of that section of the tax code. That means that donations to you are tax exempt for people who are corporations who itemize their income tax. That can be a good fundraising tool. And then that certifies, again, that you're going to be exempt from federal income taxation on your revenues. So those are the main differences between the nonprofit. The other one, I suppose, is that unlike all the other for-profit corporations, nobody owns the assets of the nonprofit. If the nonprofit closes down, whatever assets they have to go into into a new nonprofit. They can't be dispersed among the members. And the other distinguishing feature in Massachusetts, and I think it's true in Rhode Island too, is that nonprofits are limited in their liability for non-contractual matters, for torts, to $20,000. So I used to represent Northeastern University here in Boston for a long time, and we would get sued, and we would typically write back and say, this statute is going to limit your liability, our liability here, to $20,000. So it's a way to protect these. But again, the trade-off is that because you're tax exempt, and the IRS's thinking is the rest of the tax-paying world is subsidizing your not paying taxes, you have to make your books be out in the open. So that's the big trade-off. So the last one here is a partnership. And a partnership is kind of a variation on the LLC. It's not a corporation, but it's a group. You often see this with law firms. Used to be partnerships a lot, an LLP. And there are 2 general types of partnerships. One is a general partnership where everybody is working in the partnership. All the lawyers are generating business. All the accountants are doing their business. And the other one is a limited liability partnership, which again, we don't see a lot of. You see it sometimes in real estate developments and so on. And the issue there is there's a general partner who actually runs the affairs of the business. And then there are limited partners, their limitation being they don't have any control over the management of the operation of the business, but they don't have any risk of liability beyond their investment in the company. So anybody that's thinking about that, I mean, you can certainly start with us and some of our accounting mentors, but an LLP or a limited liability partnership or a general partnership is probably something you want to talk to an accountant about, because the tax treatment of the revenues received by the partners is different, and it can be a little tricky. So, and your tax reporting is going to be a little different. So now I want to kind of go back to the S corp, which again is not a corporation. It's not a business entity. The S corp refers to subchapter S of the Internal Revenue Code, and it's a tax status where certain LLCs or PLLCs, certain corporations, C corps, professional corps, B corps can elect a certain type of tax treatment that can be more beneficial. And you'll remember I told you that the C corp, the professional corp, those are taxed at the entity level, and then again when the individual shareholders or individual employees who may own the company or receive their compensation or their revenues. If you meet certain criteria, you're allowed to ask the IRS to treat you as an S corp, which means that there is no tax at the corporate or LLC level, and that all the taxes flow through to the individuals. And as an LLC or a corp, you can elect to treat some of that income as compensation for wages, which has its own tax table, and the other as distributions, as it would be for a partnership. So this is a question to really have with your accountant, because it involves a lot of math. And kind of as a general rule of thumb, I feel like if you're not making somewhere in the six figures, the S corp election doesn't really make any sense for you. But if you're up in the six-figure range, and you're seeing some considerable personal income tax liability, you would want to talk to an accountant to see if that S corp election will minimize or lower your tax, because you're going to be able to treat some of your income as a distribution, which might be at a preferred tax rate than what you're paying on your income tax. The limitations on the LLC are that it's limited to either an LLC or a PLLC. The limitations on the S corp, I should say, are that you have to be under 100 members or 100 shareholders in the company. They must be natural persons. They can't be another corporation, and they must be U.S. citizens or permanent residents. So I can't tell you I really know why those distinctions are there, but they are. So, if you're a C corp and you've got a VC owning some of your shares, you're not eligible for this. But if you're a smaller C corp, if you're a smaller professional corp or B corp, or certainly an LLC, and all your members are you're under 100 members and they're permanent residents or U.S. citizens, and you think it would make sense from a tax treatment, you would want to talk to your accountant about that status. Any questions there before I move on?
I actually have a variety of questions. I think we can
Do them at the end?
Yeah.
Okay, well, just whatever works. So the next question that comes up with your entity is, where should I form it? So we start by saying, well, where do you live and where you're going to do your work, right? So if you live in Massachusetts, if you're delivering your services in Massachusetts or Rhode Island, the presumption should be that's the best place for you to form, particularly if you're an LLC. There's no benefit in forming an LLC in Delaware, for example, where is the home of a lot of corporate registrations, as I'm sure you know. There's no reason to be. I'm actually suing somebody right now who formed their LLC in Wyoming, because in Wyoming, the names of the people who formed the company are confidential, but it's not that hard to find out who they are anyway. So seems unnecessary. But if you're going to be working in Massachusetts, you'll be best served by forming your entity in Massachusetts, with one exception that I'll talk to you about in just a second. If you're, it's a very simple process, either to form the corporation, the B Corp, the professional Corp, or the professional LLC. I find that NOLO has great how-tos for all of those. Again, you don't need to hire them to do it. You can call on us to help you, but they do have a good step-by-step. It's about $500 to register, and then you have an annual filing requirement for all of those entities, which has another filing fee attached to it. If for some reason you decide to file in another jurisdiction, you're going to pay your filing fees there. But if you're working in Massachusetts or Rhode Island, you're also going to pay to be registered as a foreign corporation or company doing business in that state. So a lot of times these online companies will say, set you up in Delaware, and it's almost routinely a waste of your time and money to do that. So, give us a talk before you do that. Let us know again how you reached your decision about which entity you want to form, and then we will try to guide you in the right step. The one exception to this is if you are going to be getting, this is why they keep me away from the keyboard here. If you're going to have venture money, if you're going to have angel money, more likely than not, you're going to be a corporation first, because they're going to want to own shares, not an equity position, but they're going to want to be in Delaware. And it's just kind of an old habit. Used to be that Delaware was the best state to have a corporation, because their laws were clearer. There was a lot of judge-made law, court-made law about what the rules were. So everybody could go in there and they knew what the terms of the contract meant. But Massachusetts and Rhode Island, they're both very sophisticated jurisdictions. But if you do get in a situation where money's coming in from another source, maybe even under a safe agreement, they're probably going to want you to go to Delaware. And I think you're just going to have to accept that. A couple of the things you're going to do when you go to start in any state, but certainly in Massachusetts, and I'm pretty sure Rhode Island too, is you'll go online first and you'll check to see if the name that you want to register the company under is even available. So you can do that, and you can reserve the name for 60 days while you're getting your paperwork together or what have you. So one of the things you'll see in these checklists is go online to the Secretary of State's office, and you'll see the corporations page, and then you'll see request or reserve a name, and then you can do your name search. And if it's available, just say, I want to hold this for now. The other question that comes up in most of these filings has to do with a registered agent. And a registered agent is the person that you've identified that the state or anybody that wants to sue you or contact you with a formal legal proceeding, who they can contact. And that has to be at an actual physical location. It can't be a PO box. So a lot of people, they're filling out the form and they're using their name and address, saying I'm the officer and here's my address, I'm working out of my house. And then they get to this and they're like, oh, I don't know if I want that to be public. Unfortunately, it's a requirement, but the ways you can get around it are places. There are certainly companies that will act as your registered agent. I always see one in Massachusetts I send people to. They're out in Pittsfield, but they charge you $49 a year. So you fill them in as the registered agent. They give you the address, and then that makes the state happy that you can be reached. There are plenty of those companies. Some of them charge way too much. I think maybe even FedEx or some of these shipping companies may offer a similar service there, but you can't get around that by putting a PO box there. So a few other things we want to talk about just before I think this may be, we'll get a little more time there. You doing okay for time, Teresa?
Yeah, I know some of that stuff at the end that David does on part
Yeah.
two.
Well,
Yeah.
we'll go through this one, then we'll talk about it. So if you're in an LLC or a partnership, you're going to create a multi-member LLC or obviously a multi-partner partnership. You're going to create what's called an operating agreement, which looks kind of like the bylaws of a corporation. We have templates there, but they basically spell out the rights of the individuals who are in the company. It addresses their capital contributions, their rights to equity or ownership of the company, how they're going to get paid, how the company is going to bring in new members, how existing members can leave. So there's a lot of good stuff there. We do have some templates. If you ever have a multi-member LLC, we'll take the easiest case first. You need to have an operating agreement, even if your spouse or your loved one is the other member. I can probably think of 5 or 6 cases in my time as a mentor where a couple of some romantically linked, but also business linked, the business and the romance falls apart and they don't have an operating agreement. And it makes it tougher to close down the business or determine what the rights are of the parties. So it's kind of like a prenup for business. It's kind of tough issues to think about up front, but it's worthwhile. The bylaws, you will need to have bylaws if you're a C Corp or a corporation, and these are going to spell out the nature of your governance body, your board. It's going to spell out the officers of the company. It'll spell out the indemnification of officers and board members. So again, more detail than we want to get into now, but these are things that we have, and we have templates for you to look at if you decide that the C Corp is the way to go. If you do issue non-publicly traded shares, we're going to need you're going to have to retain counsel for that. That's an area that's highly regulated and it's beyond our ability to help you. But if you do plan to raise capital through stock issuance, then that's an expense that you're going to have to think about incurring. So we've talked about the subchapter S election. When you get your checklist from NOLO or wherever about how to set up your company, they'll explain to you how to get your EIN if you haven't already used one. A single member LLC can use their own social security number, but we always suggest that you get the EIN. It's free. You get it, I think, on the spot. You just apply on a page at the IRS and they issue the number. And then the last thing, let me just see, we'll see if this is the last one. But the last thing is that DBA or business certificate that we talked about in response to one of your questions, where if you're operating under a different name than your corporate name or your company name, you do have to disclose that to the world. And you typically do that in the town clerk's office of the town that you're registered to be doing business in. Again, I think it's mandatory in Boston, not if you live in Boston, but if you're doing actual business, if you're delivering your services or creating your goods or selling your goods in Boston. Let's see. So you think Dave picks up here?
Yeah, I think he'll cover all those things.
Okay.
Yeah.
Well, then that's all that I have. If you have any questions, I can stop.
Yeah, we do have questions.
Should I stop sharing, Teresa? What's best?
Sure, if that's what you want to do. So some of them might be better off served seeing a mentor and discussing their personal situations, but I'll let you decide those that you would prefer to defer.
Okay.
I do want to touch on
suggest who to talk to.
Correct. Yeah. And I do want to say, because I've gotten this question a couple times, we are recording. And you can find the recording at the score.org/Boston website. And just look under the workshop tab, and then it says previously recorded. It should be posted probably sometime tomorrow so that you can rewatch it. Okay. Let me go to the top here. If you're a DBA is literally your internet domain. Let's see. I'm a sole proprietorship organizational dynamics consultancy. Do you still need to register your business or business name in Massachusetts?
If so you're not an LLC and you're not a corporation, you're just a true sole proprietor, but you're doing business, you're issuing contracts, you're being paid under this name, then yes, you need to go to the town clerk of the town in which you live and file that DBA certificate.
Can a sole proprietor file for an S Corp?
No.
Okay.
There's no benefit, just to be clear. You don't have a business structure that would allow you to issue the kind of compensation that a partner would receive. That's basically what an S Corp does, is let you take some of your personal income and treat it as either stock or partnership distributions, but you don't have that option as a sole proprietor.
This person is in Georgia, but I'm not sure that necessarily matters. I currently have a C Corp and I want to convert it to an LLC. I have attempted on several occasions, and each time the rejection states I missed a word or something little. What should I do to become an LLC? What are my next steps?
Well, one thought would be to, there's this, you can answer this. Does the C Corp have a lot of assets? Or is it really you just want the simpler tax status? The reason she can answer, or he, while you're, the reason for this is that it might be simpler just to dissolve the C Corp and reform as an LLC.
And certainly if you want to go into more detail with one of our mentors, we can kind of review those options with you if you'd like to. So
absolutely. Although, for that one, you might check the SCORE office in Atlanta if you're in Georgia, just because, sometimes states get a little quirky. I don't know why you'd be rejected, but if you were just filing to convert, and you don't, it may be that you have, I don't know if you have shareholders, that would be an issue because you'd have to address their rights that would disappear in an LLC. But I'm happy to talk to you, but I think, or Dave could too, but I think just given the fact that you're in a different jurisdiction, you should start with the Atlanta SCORE office.
Okay. Well, I did get a reply, no assets, single owner. Yeah.
Okay.
Okay. What if I'm a foreign national citizen of China, but I am a U.S. resident alien for tax purposes, not immigration status?
Yes.
Yeah, I'm not sure what that's in relation to.
If
Sorry.
If you're a Chinese national, but a U.S. permanent resident, you can form an entity, if this is your question, and obviously be paid under the entity. There used to be a thought that you could, if you're not work authorized, let's use that term because that's really what this boils down to. If you're not work authorized in the United States, people used to think that you could create an entity, but not work for it, but take your profits as an owner. But the IRS and ICE has kind of come out recently and said, no, we see that workaround and we don't accept it. So I think the prevailing guidance now is that if you're not work authorized in the United States, you're not going to be able to create, I mean, they're not going to check, but you're not going to be able to take income from that entity without it being considered employment-based income, and that's going to jeopardize your immigration status if you're not work authorized. So hopefully that answers your question.
Okay. Nonprofit. nonprofit liability is limited to 20K, or do you have to purchase special insurance for that?
We always want special, you always want insurance to cover your activities, but tort liability, not contract liability of the entity, is limited to 20K in mass. I think there's a similar rule in Rhode Island, but again, I would check with the SCORE office there to see, or just Google nonprofit tort liability Rhode Island, and you'll get the answer.
Okay, the next question's about they have an LLC with a DBA and they're thinking about adding another DBA under that same LLC. Are there things they should think about? Is it something they should talk to someone on a case-by-case basis?
Mm-hmm. So you can run as many lines of business as you want to under your LLC, and you can brand them with different DBAs. And happy to talk more, but usually a gating question about how many different lines of business you're running is, do you want the liability from one potential business to be able to affect other assets from another line of business with that same LLC? So to give you a kind of a common example, real estate developers often create a separate LLC for each project because they don't want all of the assets from all of their projects at risk based on a problem arising from one project. So if you're just kind of branding variations on the work you're doing and the revenues are kind of all the same, that's fine. But if you were to, it's not uncommon that, I have a client who does a fitness business, but he also does healthcare consulting, kind of navigating people and finding care for them. And, my advice to him was, those are really separate lines of work with really separate risk profiles. So if it were me, I would create two LLCs to insulate the fitness business from the assets generated by the health navigation business and so on.
Okay. Can a single member LLC issue owner salary and a W-2?
That broke up a little. Can a single LLC?
Oh, sorry. Can a single member LLC issue owner salary and a W-2?
Yes, you can pay yourself as an employee.
Okay. Sorry, I'm just answering another email or another question here real quick. Okay. If you plan to sell only virtual services and plan to self-fund and own 100%, it sounds like an LLC is the best path, if not considering a B Corp. Is there any reason to do any other structure in this case?
There'd be no reason to consider a B Corp in that situation because you're not worried about shareholders getting upset that you're not maximizing their profits. So the LLC sounds ideal. It sounds just right. You get the liability. We have a colleague of mine and I put together a great set of contract templates to talk about that piece of risk management that talks about how to take on the right liability for your work, but not take on more liability than you should, and to limit your liability to some number that looks like the amount of fees that you're going to get. I tell people, you don't want to do $100 job and take on $10,000 of liability, for example. But the LLC sounds perfect.
Oh, I have a clarification on that other one question. The question is this is the one about the citizen of China.
Okay.
If I can elect S Corp status for my LLC if I'm a foreign national, but I am a U.S. resident alien for tax purposes, not immigration purposes. So could she or he elect an S Corp status for their LLC?
So I'm going to just make sure that I'm making the right equivalence here. When you say resident alien, I'm saying permanent resident. So I don't want to get tripped up in the nomenclature somewhere. But if you're saying that you're a U.S. permanent resident, and then yes, you can do that. If you're authorized to work, then by definition, you're a permanent resident. So
And if we're not getting the details right, this might be a better case for
they can give me a
reaching
call.
out to us and we can set
Great
you up a
point.
meeting. Yeah.
Exactly.
Okay. It sounds like a sole proprietor to LLC is pretty simple,
Yep.
correct?
Mhm.
I am a sole proprietor and I have a business name already and a DBA certificate. So a $500 fee plus annual fee. I just want to double check, no lawyer needed.
Well, yes, there is one more thing needed. Right now, your DBA is under your personal name. When you convert to an LLC, if you're going to continue to perform under whatever your DBA name is, you're going to have to file a new DBA on behalf of the LLC.
Follow up to that other question. Okay, so the person that we had the question trying to take a C Corp to an LLC, they just realized that they filed under the wrong format. And I have reached out via phone, email, no help, no guidance given. What should I be doing now at this point? When I cancel the C Corp, it makes me a new business when I file a new LLC. And I have been in business 2 years. I have to keep, to keep the 2 years for monetary support. So she doesn't lose, or he or she doesn't lose how long they've been in business.
Well,
I guess is what they're saying.
You're welcome to contact me on this. I'll talk you through it some more as a general matter about what it means to convert. It's just, there may be some nuance in the laws in Georgia that I just, wouldn't know where to start to figure it out. But if you dissolve your C Corp, if you're the only member of the C Corp, you own all the assets, you own all the liabilities. So when you dissolve it, if there's more assets than liabilities, that's yours. So there's nothing going to stay in the C Corp after you dissolve it.
Okay. And I just got a question from Dolly. Dolly, I'm going to definitely encourage you to reach out to us so that the mentor can go through your specific situation. It's free and confidential, so you've not lost anything, but it gives you the opportunity to give a little bit more background on your question and go through some details with a mentor. So I definitely strongly encourage you to do that. To get a Boston mentor, you can email me at outreach@scoreboston.org. Or if you want a mentor in your chapter, go to the score.org website. And there's that, like I said, the little zip code box. You put your zip code in and that'll get you to your chapter and you can fill in your question and somebody will reach out to you. That is all the questions we have, Bill. So great job.
Like it's almost all the time we have.
Yes, it is. So thank you everyone for joining us. And we look forward to seeing you at part 2 or at another webinar in the future. Thank you.
Thanks all. Thanks, Teresa.